This video is a review of Sojitz's fiscal year 2024 full-year financial results, the period from April 2024 to March 2025. Sojitz Corporation is a Japanese general trading company, Sogo Shosha, that engages in a wide range of businesses globally. It was formed in 2004 through the merger of two other major trading companies, SZHFY Corporation and Nichimen Corporation. Sojitz is one of the 7 major trading companies in Japan. FY24 Summary: Sojitz made a net profit of 110.6 billion yen for the year, which is 9.8 billion yen more than the previous year, and slightly above their full-year forecast of 110 billion yen. Core operating cash flow also rose by 26 billion yen year-on-year to 135.2 billion yen, showing that they're making more profit while also bringing in cash. Both ROE, return on equity, and ROA, return on assets, have improved. EPS, earnings per share, came in at 514 yen. When comparing the average EPS from the current and previous medium-term plans, Sojitz is growing at an annual rate of 10%, steadily moving toward its 2026 EPS target of 570 yen. For fiscal year 2024, revenues and profits increased, resulting in good results overall. Summary of profit or loss: Sojitz's gross profit for fiscal year 2024 rose by 20.8 billion yen year-on-year to 346.8 billion yen, nearly meeting its forecast. While the Metals and Mineral Resources division saw a decline due to lower coal prices, other divisions reported profit growth driven by new consolidated subsidiaries and stronger earnings from existing businesses. SG&A expenses increased by 28.4 billion yen, mainly due to a rise in consolidated subsidiaries, yen depreciation, and higher costs from personnel and inflation. One-time gains came from the sale of part of the marine business, equity changes related to Sakura Internet's public offering, and the sale of an overseas industrial park. Although rising interest rates had some negative effect, increased dividend income, particularly from industrial salt-related businesses, helped reduce overall financial costs. Equity method income rose to 49.6 billion yen, and net profit for the year reached 110.6 billion yen. For fiscal year 2025, Sojitz forecasts gross profit of 400 billion yen and net profit of 115 billion yen, including a 5 billion yen negative impact from international tariffs. Summary of profit by segment: FY 2024 consolidated net profit was 110.6 billion yen. Several segments saw significant changes in profit compared to the previous year as follows. The Aerospace, Transportation, and Infrastructure division saw higher profits driven by increased activity in defense, aircraft, and business jet-related transactions, as well as gains from selling part of an overseas industrial park and the marine vessel business, surpassing expectations. The Energy Solutions and Healthcare division also outperformed forecasts, thanks to strong earnings from energy-saving services and increased contributions from its LNG business. However, the Metals, Mineral Resources, and Recycling division recorded lower profits due to weaker coal market conditions and reduced sales volume. The Chemicals division improved significantly, recovering from last year's one-time losses and benefiting from increased trade volume and dividend income from an industrial salt-related business, exceeding the forecast. FY25 forecast gross profit and profit by segment. For fiscal year 2025, Sojitz is forecasting a net profit of 115 billion yen, which includes a 5 billion yen negative impact from mutual tariffs between the US and other countries, with a base target of 120 billion yen. The Metals, Mineral Resources, and Recycling division is expected to see a decline in profit due to ongoing weak market conditions, while other segments are projected to maintain or exceed last year's profit levels. The Aerospace, Transportation, and Infrastructure division is expected to maintain stable profits, even after the absence of one-time gains from the previous year, as defense and aircraft-related transactions continue. In the Energy Solutions and Healthcare division, despite a projected drop in LNG-related profit, other energy-saving services and new investments are expected to keep earnings stable. The Chemicals division is anticipated to grow through the expansion of both existing and new businesses. The Consumer Industry and Agriculture division is likely to see higher profits thanks to strong overseas fertilizer business and a rebound from last year's one-time losses. Finally, the Retail and Consumer Service division is expected to perform steadily with contributions from domestic retail and marine product businesses, and may benefit further from recovering consumer demand in Vietnam, although the impact of U.S. tariffs on Vietnamese domestic demand remains a risk to watch. Commodity prices, foreign exchange, and interest rate. For fiscal year 2025, Sojitz assumes an exchange rate of 145 yen per US dollar. Although the yen is currently trending stronger, a further appreciation would negatively affect the company's consolidated net profit due to currency conversion when consolidating results from overseas subsidiaries. Specifically, every 1 yen change in the U.S. exchange rate impacts annual net profit by approximately 0.3 billion yen. The current exchange rate is around 143 yen, and since Sojitz's forecast is set at 145 yen, if the yen continues to strengthen, profits are likely to fall short of expectations. Share repurchase. Sojitz announced a share repurchase plan on May 1, 2025. The purpose of the buyback is to provide flexible shareholder returns in line with the company's medium-term management plan 2026, considering its current stock price. Sojitz plans to repurchase up to 2.8 million shares of common stock, about 1.3% of its outstanding shares, for a total amount of up to 10 billion yen. The buyback will take place between May 2nd and July 31st, 2025. Once again this year, Sojitz carries out a share buyback, so shareholder returns are still looking good. Shareholder Returns Policy. Medium-Term Management Plan. 2026 outlines a policy to return about 30% of its core operating cash flow over 3 years to shareholders. As part of its dividend policy, it aims for stable, gradually increasing dividends based on a 4.5% DOE. Dividend on equity ratio planning to raise the annual dividend to 165 yen per share by March 2026, a 10% increase from the prior year. For fiscal year 2024, annual dividends are 150 yen, an increase of 15 yen from the previous year. In terms of share buybacks, it completed a 20.9 billion yen repurchase of 6.5 million shares by March 2025, and has now approved an additional 10 billion yen buyback. Looking ahead, the company aims to grow core operating cash flow to further enhance shareholder returns. Sojitz has a very detailed shareholder return policy and considers shareholder interests to be an important issue. Good continuous shareholder returns from Sojitz can be expected in the future. Stock price. This is the Japanese yen-based chart for the last 1 year. The Japanese yen stock price is 3,488 yen as of May 7th. US ADR stock price is apparently inactive. Current PBR is 0.76 and PER is 6.4. Dividend yield is 4.73%. Compared to the last few years, all PBR, PER, and dividend yield indicate that current stock price is relatively cheaper. Dividend yields have been falling overall in Japanese stocks recently due to rising stock prices, but Sojitz's dividend yield of 4.73% is at a high level. Conclusion. For the current fiscal year 2025, Sojitz is also forecasting higher profits and a further rise in EPS, indicating a positive outlook going forward. Thanks in part to the effects of share buybacks, EPS, earnings per share, also has been increasing. In addition, the dividend yield is approaching 5%, making it an attractive stock for dividend-focused investors. Although there are concerns about future exchange rates, tariffs, and falling resource prices, Sojitz's non-resource businesses are showing steady growth, which is expected to offset these risks. Overall, the FY 2024 results were good across the board.